Now, our next guest, though, says oil prices may actually hit $200 a barrel. He is Aaron Smith, Managing Director of Superfund Financial Singapore, which is a diversified futures fund. And he joins us right now on the show. Aaron, thanks very much for joining us and welcome to Singapore.
Good morning, Arnold.
Let me ask you first about oil. I mean, 118 right now, you're saying it could be $200 a barrel?
Yeah, if you look at the long-term trend, long-term moving averages, the 14-month trend line, we see that oil is still in a major uptrend from a technical standpoint. It's normal that oil is going to have 20 to 30% pullbacks along the way. Actually, in any bull market we've seen, there's always going to be corrections at certain points in time, but we believe that the oil price can go ahead to $200 a barrel. Actually, if you go back to 2005, our founder, Christian Baja, was calling for oil prices at $100 a barrel, and that seemed aggressive at that time, but certainly we think in the long run oil will become much more expensive, and this pullback is a great opportunity for investors.
Okay, so tell us a little bit about what you're doing exactly with oil right now. I mean, you're a futures-based fund, so you're bullish in the longer term, presumably, about oil hitting $200 a barrel.
Well, Superfund is a diversified managed futures fund. We're trading in over 100 futures markets, so everything from crude oil to metals to soft commodities, interest rates, foreign currency. So we have a very diversified trading strategy. But what separates us is that we can actually benefit from the uptrends and the downtrends. Being a fully systematic trading strategy, we take long and short positions based on the overall trends in the market. So actually, if there is a major pullback and a reversal, we can actually take short positions as well. That's actually one of the reasons we've been able to benefit this year from the overall weakness in the stock indexes.
Okay, let me ask you about the risks involved. I mean, you sound pretty much like a hedge fund, and there's a lot of risk involved there as well. I mean, they make billions, but they also lose billions sometimes. I mean, how do you explain that to the potential clients and to customers?
I think it's quite different because Superfund is a managed futures fund, which is highly regulated. We have public offerings in the U.S., in Japan, throughout Europe. And we also have a offering which is registered with MAS here in Singapore. It's a restricted scheme. So we have a high amount of regulatory oversight and a strong risk management as opposed to those to hedge fund strategies.
And tell us about your returns on an annual basis, year to date. How have your funds been doing? You've been around, what, since 1996, so that's 12 years. On an annual basis, what's the return been like?
We've been trading since '96. On average, in our most conservative strategy, we've averaged about 18% a year. The more aggressive strategies have averaged around 22% and 28% over the past 5-6 years. Year to date, our strategies are up between 17 and 24% through the end of July because we're able to take advantage of the overall global macro trends in the marketplace.
What's your call in terms of the commodities market right now? I mean, we're seeing a little bit of a pullback like we're seeing in oil. What you doing with that one?
It's completely normal that we should give back some of the profits that we've made in commodities. And actually, investors who thought they missed the boat on commodities can now see this as a great opportunity, especially investors looking to get into gold, because we also believe that gold can go to $1,500 per ounce in the long run, in the next 2 to 3 years, we would say.
Okay, so how have you done? Let's just pull out commodities here. How have you done in terms of where the market is going right now?
Well, if you look throughout most of the year, there were great trends on the upside in grains, soy, rice, very strong trends to the upside. There were also great trends in energy markets and metals. We've also benefited from prevailing weakness in the U.S. dollar as well.
Aaron, got to go. Time's up. Thanks very much for that. Aaron Smith is Managing Director of Superfund Financial Singapore. More coming up after the break on CNBC's Cash Flow, so stay with us.